Australia's economic growth numbers for the March quarter will be released shortly by the Australian Bureau of Stats. Let's go live to business reporter Ed Boyd. Ed, economists are expecting a soft start to the calendar year.
Yeah, we received the GDP partials numbers yesterday, which is sort of the final piece in the puzzle before today's figures. The expectation from economists is economic growth will lift about 0.4% over the first 3 months of this year and lift 1.5% over the 12-month period. And really it's due to a bit of a fall in public investment in that first quarter and also a decline in profits for Australia's mining sector. The figures have just come through and economic growth is a bit lower than expected. It is 0.2% in that first quarter and it is 1.3% at an annualised rate over the calendar year to the end of March 31. So weaker than expected economic growth numbers for Australia. Economists were expecting a weak result. In fact, yesterday, several of them trimmed their economic forecast for today's numbers. So we've got 0.2% quarterly growth, only 1.3% compared to the March quarter of 2024. The ABS say economic growth was soft in the March quarter. Public spending recorded the largest detraction from growth since the September quarter of 2017. Extreme weather events reduced domestic final demand and reduced our exports. Weather impacts were particularly evident in mining, tourism and shipping. It also says GDP per capita fell 0.2% this quarter, following a 0.1% rise in the December 2024 quarter. Remember, GDP per capita, if it's negative territory, it basically means we are in what some economists refer to as a per capita recession. Here's the stats. You can see the December quarter last year, growth was 0.6%. Things were looking pretty good. It was getting a bit better. Now, March quarter, it's gone backwards a bit, growth of only 0.2%. Then you have the annual rate on the far right-hand side of the screen. Annual rate of growth has remained stable at 1.3%. It was expected to go to 1.5%. So this is a bit of a weaker result here for our economy. Just also looking through more of the stats that have just been released. GDP per hours worked is a key figure that basically measures productivity. And it shows here between December to March 2024, it was only up by 0.1% over a 12-month period. And through the year, it's actually gone down slightly as well. So it looks like the GDP per hours worked, or the productivity challenge that Australia's economy is facing, hasn't been solved yet. It's going to take a bit of time to get back on track. We know productivity has been at basically 60-year lows. Here's the quarterly growth. You can see 2021, there was some big increases. And then since then, growth has been pretty muted. In fact, you can see throughout 2023 and most of 2024, economic growth was around 0.2 to 0.3%. And now it's gone back down to 0.2%. So figures probably going to be a little bit of a surprise here, Kieran, today for economists. We're expecting it to be a little bit stronger, but there's obviously been those severe weather events. We've obviously seen some serious flooding. Also some cyclones off the coast of WA sort of stopped exports from the iron ore sector as well. So tourism was lower too. People weren't travelling around Australia as much due to those weather events. And the big thing as well, it holds up our economy's consumer spending. And consumers are obviously a bit cautious during that first 3 months. GDP per capita, we're now back into what some economists refer to as a per capita recession. At the same time, we've had reasonably strong population growth, which is one of the reasons why, Kieran, we are now back in that per capita recession.
We're going to hear from Treasurer Chalmers in about 45 minutes from now. We know the Reserve Bank was expecting quarterly growth of about 0.5%. So today's number will do nothing to prevent them from cutting rates again next meeting.
Well, that's right. So that's the good news out of this weak economic growth. What happens when Australia's economy is weak? The Reserve Bank wants to help stimulate the economy, get people spending money again. And one of the ways they do that, obviously, is with the cash rate, which is now at 3.85%. There was obviously one interest rate cut during that March quarter. It happened around the middle of February, the first rate cut of the year and the first rate cut since 2020. That gave the market a little bit of confidence, but we've had another rate cut since then. And with the RBA in their most recent forecast expecting 0.5% GDP growth for this quarter, with it coming in at 0.2%, so a fair bit lower. They're now going to be really encouraged to cut rates on the 8th of July. The market was already pricing in an interest rate cut on the 8th of July of 25 basis points, but we saw the RBA minutes also yesterday, Kieran, where they talked about potentially cutting rates by 50 basis points last month, so there could potentially now be a chance that the rate cut coming up will be a bit bigger. It could potentially be 50 basis points due to these weak economic numbers.